Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, August the 16th, 2024. Can we count 5 waves up? 1, 2, 3, 4, 5, or are we dealing with a correction? The answer is still out there, though we're starting to see a few clues that look in the right direction. And remember, as long as we stay above last Monday's low, things can move higher. And for now, also the price action does look corrective since the top we struck almost a week ago. So let's go straight to the charts, and we are going to revisit Bitcoin, Ethereum, Bitty, Mara, and some other work. So here is the potential 1-2 setup. Then this was a first wave, potentially even a 1-2 setup. The correction since this high here made about 3 days after the low on Monday, so that was last Thursday, still looks corrective like an A, a B, and a C for a potential wave 2. Okay, so here we then have these breakout targets in gray. If we break above the high at about 62,750, we can target 66,000 and potentially 73,000. Okay, those are the two symmetry targets we're going to look for. I'll make them a little thicker so it's a little easier to delineate between the Fibonacci extensions and the symmetry extensions. Fibonacci, if we're going to follow a standard Fibonacci-based impulse pattern, targets to about 83,000 for an impulse, which is right inside the ideal green wave 5 target zone. Nothing too off. We would have liked to see 95,000, so 95,000 plus or minus 5,000, but beggars can't be choosers. And this is still well within the realm of normality for this green wave 5. Again, it does require a break above 62,732. That is pretty much my initial signal that the low is in place for sure, and that we are going to run higher. Then, of course, we need to break above this downtrend line here that has held the upside in check here in July, in June, in May, in April, and in March. So that's pretty stiff resistance. But if we can get there, so this breakout above 62,750-ish, somewhere around there, that will then be a bullish sign, because then we're back above the 200-day, the 50-day, the 20, and the 10, and the Ichimoku cloud. And that, of course, will turn charts completely bullish. For now, we did break below the first warning level for the bulls at blue, and also below the second warning level in gray. But we reversed back above both so far, so good. We haven't broken below the third level or, of course, the final level. Okay, so now we can readjust those targets, because those were based on previous price action. So I'm going to lower the third warning level a little bit. I'm going to lower the gray warning level a little bit, and lower the bull warning level for the first also a little bit. So these are now the warning levels for the bulls. Today's low, yesterday's low, the low made here, which is closing basis, and of course the final low made early August. So those are the parameters we're currently looking at. If I look at the hourly chart, we might have here a failed fifth wave. Okay, so if I've counted all these many little waves correctly, then we have, since this high here, the gray wave 4, 1, 2, 3, 4, 5, 6, 7, 8, 9 waves lower with a potential failed fifth wave. That has happened before in Bitcoin. As you can see here, we got almost within it. So this looks pretty good. Then we have a leading diagonal 1, 2, 1, 2. This wave 2 is, of course, longer than this wave 2, so that's a little odd, but it's not necessarily wrong. This looks like an impulse. If I count it correctly, it is 1, 2, 3, 4, 5, 6, 7, 8, 9 waves. Impulse. This looks corrective, loud and clear. This is not an impulse, not in my book. This is also corrective. This is corrective. ABC, ABC, ABC. So this could be a double zigzag, for example. So this would be ABC, W, ABC, X, ABC, Y. And we should now hopefully impulse higher. So the warning levels for the bulls are, of course, also on the charts, on the hourly chart. So again, this counts reasonable as 5 waves up. I know on the daily chart, it's a little different. That's okay. It both points to higher prices. So let's give it time to evolve. And if not, and we have our warning levels in place, we know where we're going to go, because then we have a potential ABC path. In the bigger picture, also a double zigzag lower. So this is a zigzag lower, zigzag up, and then we should do another zigzag lower. That could go as low as 43,500. Okay, that's how low it can go. It can even go to 39, 40,000 if it wants to. It's not my preferred point of view, especially since we did break above, though not on a closing basis, the third warning level for the bears. That is often a serious hit. As I mentioned before, you can see it as a shot on a battleship, that the first shot is just shot across the bow. The third shot is, of course, then a hit, and the fourth one will sink the boat. But that you're familiar with. So this is Ethereum, and Ethereum can be counted as a diagonal. I'm not really in favor of diagonal, but it works reasonably well. So we have 1, 2, 3, 4, 5 waves up and overlapping. Wave 4 and wave 1 overlap. That is the hallmark of a diagonal. Okay, let's see if we can get some reasonable, okay, let me get this one on the table there. Reasonably okay Fibonacci work going. So that's wave 1. And then this is wave 3. It's about equal length of wave 1. And then wave 5 is, of course, the shortest wave. It's a little arbitrary if wave 5 topped here or there. It really doesn't matter much in where we should expect then this wave 2 to bottom. It can already have bottomed, by the way. That would be about a 38.2% retrace, I believe, which is shallow for a second wave, but not completely out of the realm of impossibles. So if we break above 27.25, 27.20, somewhere around there, right? That's the key level to watch, 27.25. And these are still our symmetry targets we can look forward to. Okay, so that brings us 2,900, 30.25, 3,100, and all the way to 33.25. Okay, for a potential wave through 3. But again, we have not broken above it. So the warning levels for the bulls have been adjusted. And the first one is, of course, today's low. We could probably even bring it to yesterday's low, which is quite equal to this potential wave 4. Again, I'm merely at this point showing potentials because we have so little confirmation. Okay, that's why yesterday's update was so brief. I got really nothing to say. But with today's price action, it starts to look a little bit better for the bulls. But again, it could be a fourth wave and we still get the fifth wave. Okay, we only got above the second warning level for the bears. So once again, the bulls are absolutely not out of the woods. As you can see, we're well below the moving averages and they're bearishly stacked. So the onus is on the bulls. The bears can sit back and relax and wait till things turn around, so to say, with, as always, the appropriate stops in place. So once again, the charts are not yet constructive. They're not. From a pure objective point of view, not. This is a bearish chart. End of story. Bottoms always occur when charts are bearish, of course, just as tops occur when charts are bullish, of course, right? That's the difference. But for now, the trend is down. That's what we have to deal with. And we're trying to figure out if we indeed have bottomed or not. But again, still too little price information, though it starts to look reasonably okay. That's the thing. It starts to look reasonably okay from Elliott wave perspective. And the beauty is of Elliott wave, it can foretell things way ahead of time when charts are still bearish. So again, as long as we hold, of course, above this August 4 low, I believe it was, which is almost 12 days ago by now, we can move higher. Okay, so if you decide to go long, you kind of know where to place your stop levels depending on your pain tolerance. And once again, there is no risk. Okay, today I just entered a trade. I put about $1,000 to work, and it is very little of my capital. I already made good profits since I bought a lot of stuff last Monday, and I was up 30% on what I put to work. And I was like, okay, I'll take one trade there and hold it for the long term. Either I'm going to lose $1,000 or I'm going to make 10 to 100,000 to be determined. It's long term. We'll see. Okay, so that's the risk I'm taking. Again, not no risk, but it's very little risk. And as long as you manage your risk, you're doing well within any financial market. It's all about risk management. I don't care about the profits. That's great, but the risk is all right. I'm going to lose $1,000, but I have a potential of making 10,000, something like that. All right, moving on. Enough said about me. This is IBIT or BITI, whatever you want to call it. IBIT, I bite. It's all good. It does look like 5 waves up, as you can see. 1, 2, 3, 4, 5. Okay, if you would do this chart on a closing basis, which is always a nice method to elucidate the waves, you can see 5 waves up. 1, 2, 3, 4, 5. We had a slightly higher close here. Okay, so that could be a-okay for a impulse, where then 1 was the longest, 5th wave was the shortest, and the 3rd was in between. It definitely wasn't the shortest. So that's pretty good. As long as the 3rd wave is not the shortest, it's okay. I've placed the warning levels for the bulls here on the charts, okay, which were broken, but it held. The first warning level was broken, but it held the second warning level and definitely above the 3rd. So we'll keep this on the chart for now. These are the warning levels for the bulls. We're back above the first one. Okay. So this looks good. And again, a wave 2 can't go much lower. We can go to about 31 plus or minus $1 for this wave 2, and then a wave 3. This could just be A, this could be B, and this could be C. Okay. Very well possible. But we also have the warning levels for the bears on the charts. Okay. And these are given here. And as you can see, we've broken above the first and the second one, not yet above the 3rd. The 3rd one will really give us a nice launch pad to move into the 40s. I don't know why this one was placed here, but this is wave 5 and this is wave 2. So wave 2 can have already completed. Okay. Let's go to Mara. I wanted to show Mara because, of course, the wave count is really flubber the bobber. This is a very ugly advance. This is the best interpretation I can make out of it. But I do wanted to point out the extremely oversold Chink money flow. Okay. And if we go back in time, all the way here to November 2022, you can say, why not even further back? Sure, we can go further back in time. And of course, we have this all important top in late 2021. But the Chink money flow has not gotten as oversold as it was recently since then. Okay, so these don't count. We want to have equal or worse conditions, right? Not better conditions. So the first condition that then came that was equally or more oversold was not until November 2022, which was pretty much at the end of this 1 year long bear market. Okay. And as you can see, the risk reward longer term was a-okay. And here we started to improve, of course. So the lower price went, the more the money flow increased. It was still negative, but it was less negative. So that's positive divergence. Again, the further we went in time and the lower we went. So the first signal was about $10 and then eventually it bottomed out at 5. So there's, of course, tremendous risk. This is still 50% risk. And you had about to about here, 200% upside potential, top to top. Okay, so that's one showing, okay, we could be close to a bottom. Now we're going to zoom in a little bit because that's quite a busy chart. And then again, you see these lows, right? So it looks like we're getting close to a low. The next levels that were this low on the Chaikin money flow were in October of last year. And that pretty much dictated a bottom. And before that, or after that, sorry, is April of this year. Also there, pretty close to bottom. Again, past performance is no guarantee for future results, but we have 1, 2, 3, 4, 5, 6 occasions where each and every time it started to look like we're getting close to a bottom. So let's see here, this level here, we were about $8 and we bottomed at about 4. Again, 50% downside, but you had here 300, almost 300% upside potential. Not bad. Of course, the lower it went, the bigger your upside potential, the lower your risk. Okay, so we can still have struck a low on Monday, but I, of course, need a lot more information than that. But I wanted to show you that it seems like we're really pretty washed out from a Chaikin money flow perspective. Also from a MACD perspective, by the way, these are pretty deep levels. So as long as we hold once again above Monday's low, this can move higher, and the technical indicators start to suggest that it's very possible that the path of least resistance is now higher. Last but not least, I saw this very interesting post by CryptoCon, one of my favorite ones on technical analysis and cycle analysis and previous patterns compared to current price action. And so we have cycle 1, 2, and 3 here on the left for 12, 16, and 20. And every time it shows that we have a peak here and then a secondary peak here and then a low in August. So we had the low here on August 12th, August 16, and this was early September. Give the market a break. And we have rather similar price patterns, right? You have this big drop. So it does suggest that a low could be in place and that we're on the cusp for a new rally. Okay. And as you can see here, these rallies from those lows were, of course, pretty sloppy initially because, like, if you can see it, this was the first wave, second wave, 1, 2, 3, 4, 5, leading diagonal ABC. And this looks like a 1, 2, 1, 2 setup. And here again, leading diagonal for a 1, a 2, etc. Okay. So that is potentially what we're seeing right now. So that's the good news. Okay. It's unfortunate we only have 3 cycles to compare with. The database is very limited. But if those previous cycles shows this has been the case every single time, we must assume it's going to be the case now as well. There's no evidence to the contrary. But price is the final arbiter, and that's why we have those price levels, as I pointed out on the chart. So this is for Bitcoin. Again, we're not throwing in the towel. We're not giving up hope. Some of the wave counts that I shared with you start to look reasonably okay. And please allow for a little bit more time to become more certain on these wave counts. So we have now other patterns and other evidence that suggests a low is in place. So bottom line, once again, is as long as last Monday's low holds, we can move higher to those new all-time highs and potentially look at 83,000 plus. Not saying that is absolutely going to happen. No, I cannot predict the future. I don't have a crystal ball. Nobody has. We are forecasting based on the price data and other data points available to us. And if that changes, we change our opinion about it. But for now, this looks reasonably good. So we have our risk, which is Monday's low, and we've rallied from it rather substantially already for several of these cryptos: Bitcoin, Ethereum, Binance Coin, Solana, and also Binance Coin, as I shared yesterday, it looks pretty good as a impulse up. So that one is also supportive of higher prices. So let's not throw in the towel just yet. Let's stay positive. Let's assume it's all we can do, that the data we have is correct. And if the past was nothing but sunshine, then we must expect the future also to be sunshine until proven otherwise. And I hope with this positive message, you will have a great weekend. Take care, trade safe as always, and I'll see you next week.